Stocks and bonds answers to the most important questions. What are stocks and bonds? Shares and bonds are investment securities. However, there is a significant difference between these financial instruments. Stocks are issued when a company needs money. That's how it attracts additional investment. In essence, they are a piece of its assets, an equity financing in which is not obliged to pay interest to repay the money received from their sale. With stocks in your portfolio, you can participate in the life of the company at some extent. Bonds are like promissory notes, as if you lend the company money. For that favor, it agrees to pay you back in addition to the value of the bond interest. What is different between bond and stock? When you buy a share in a company, you receive a stake in the business and you become shareholder. Your right in the company depends on the number of shares you own. When you buy a bond, you credit the company and get your money back after a certain period of time. For this loan, the company pays you the percentage of your money in several times a year. The difference between stock and bond is that the income on stocks depends on how successful the company is, while the income on bonds is always fixed. How do I make money on stocks and bonds? Most often there is no interest on stocks, and in this case you make money on the price difference. Buy cheaper, hold out and sell more expensive. It's a riskier asset than bonds, but you can make more money on it. Bonds have an expiration date, during which we receive guaranteed dividends, and at the set date several times a year, the company extinguishes them by paying us the value of the bond. Bond-like stocks are valid as long as a company or organization that issued them exists. State bonds are the safest because there is almost no chance that the country will collapse. The company's bonds can't compete with the government in this regard, but the interest on them is often higher. What is the point of buying stocks of global companies? Usually in growth companies, profits are up to 10 to 20% quarter over quarter compared to a year ago. For example, Apple stock has grown 10 plus times in the last 10 years, and its overall value has increased almost 60 times since 2000. Hardest hit by the pandemic were airlines and the industries that depended heavily on logistics. For example, Aeroloft was trading at $107 in January 2020, and in March it was trading at $55. Since most of the lockdown restrictions remain, the company's stock price is still below pre-crisis level. It's trading about $67. But there are companies whose stock has not only fallen during the coronavirus pandemic, it has risen, so you could say the securities are a good source of passive income. Should you avoid companies that have declining stocks? Not at all. 20 years ago, Amazon stock was down to $10, and now it's worth over $3.3k. If you had invested $100 in Amazon back then in 2001, you'd get more than $33,000 if you sold the stocks now. Today, founder Jeff Bezos is one of the richest men in the world, and his other company, Blue Origin, has learned how to build spaceships for tourist flights into space. But there is a reverse situation. In July 2018, for example, Facebook published a downgraded financial statement, and its shares fell by quarter. VTB Bank, for example, also has regularly deteriorating performance. Its shares have fallen twofold in 3 years. Nokia stated that the company will not meet sales and profits, and its shares plummeted 15%. That's why it's very important to keep an eye on the company's quarterly reports and forecasts. How to invest in stocks and bonds of global companies. Individuals cannot buy stocks and bonds directly, only through intermediaries like banks and brokers. The service is called asset management. You have to sign a contract with bank or broker, open an account and transfer the money to it. Their intermediaries will invest on your behalf. All this may take more than 1 day, and it will cost a penny on average. It costs 15% of your income. Here's the sample list of what you'll have to pay the broker for: the transaction fee, commission to exchange clearing and depository centers where brokers buy security for you, account opening and maintenance fee. There may be an internet trading system fee for about There may be an internet trading system fee up to $10. You need to track trades. They may be commissioned for your broker's use of leverage, commissions for depositing, transferring, and withdrawal money and securities, and etc. To summarize, for the service of banks and brokers, you have to pay a fee, and these services, including fees and commissions, will be about 15% of your income. Plus, you have to pay on tax income. Depending on country, it can range from 13 to 30%. Where can I buy stocks and bonds without intermediaries? You can't invest in stocks and bonds themselves without intermediaries, but there is a good alternative: to buy tokens for stocks and bonds. Once you choose a reliable crypto exchange, you need to register on it. Regulated platforms require proof of your identity. The next step is to make a deposit into your account and buy token for the asset. How are the stocks and bonds different from their tokens? A security token is a doppelganger of securities with all the properties. When a stock goes up in value, its tokenized shares goes up too, and vice versa. When bonds pay dividends, tokenized bonds pay the same dividends. Tokenized assets are traded on cryptocurrency exchange. It works like this. When you buy a token for asset, stock, bond, stock index, etc., the exchange immediately buys the underlying asset. For example, if you buy a token for Apple stock, the crypto exchange buys the Apple stock itself. And while you own tokenized stock, it keeps underlying stock as guarantor. It turns out that your tokenized security has all the technical advantage of blockchain, and yet it is secured by a traditional market asset. In fact, the token holders become the owners of the stock. The price of the tokens for an asset will match the price of the underlying asset 24 hours a day. The gains, losses, guarantees, and risks are identical. How much does it take to buy stocks, bonds, or their tokens? Let's not consider the value of stocks. It is different for everyone and constantly changes depending on the market or company situation. Let's talk about the entry threshold. On average, crypto exchange, it's enough to put 100 USD or Euro equivalent into your account to buy tokenized share. It's the same with brokers. It will depend on what kind of shares you want to buy. There are some very cheap ones. For example, a Coca-Cola security costs only $62. What is the main difference between stocks and bonds? Shares are the shares in company. By attracting additional investment through stocks, the company is not obliged to pay interest or pay back the money it received from selling them. Bonds, on the other hand, are like promissory notes, and if you have lent the company money for the service, it agrees to pay you back, in addition to the value on paper, the interest as well. Which is more advantageous when comparing stocks and bonds? A bond has expiration date during which you receive a coupon payments on a fixed date. The company redeems it, paying us the value of the bond. The yield will be guaranteed but small. The stock can rise by dozens of percentage and fall by the same amount. You can make more money on them, but the risks are higher.